Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock with news of a confusing mess of negative public policy moves. The political mess in Washington is unsettling markets today. Wall Street is down more than 1%, compounding yesterday's losses. For the week, we're now down more than 2%. It looks like the Chinese aren't going to agree to the Phase 1 deal unless the US rolls back tariffs. And the US administration is saying there is no time limit and backtracking on imposing more tariffs, which were due to kick in on December the 16th. The US is also adding to the list of allies it is offending, this time in Europe, after adding Brazil and Argentina yesterday. France and the EU said they were ready to retaliate if the US acted on a threat to impose duties of up to 100% on imports worth almost $4 billion in annual trade. Some European markets fell, others rose. The biggest reduction was for London, England, which was down 1.8%. And risk is back and markets are reassessing how the risk is priced. This time New Zealand seems to be favoured with a rising currency. In China, two more large private companies failed to repay bonds worth more than $770 million, underscoring rising debt risks as their economy slows. The OECD has released some standardised education test results, and that shows New Zealand performing better than the OECD average. But it is a sinking standard, and New Zealand education achievement levels are sliding relative to other countries. In fact, in math, we're now below OECD averages. Australia has recorded another large current account surplus, this time $5.2 billion in the third quarter of 2019. Its goods service was a whopping $22 billion. And there was a dairy auction overnight. This one broke the string of 5 rises with a small 0.5% fall. But both the key skim milk powder and whole milk powder commodities managed to gain, even if they were minor. Overall, in New Zealand dollars, however, the result was down 1.9% on the rising exchange rate, being pushed up by government stimulus announcements and expectations. And bond yields are on the move, and quite dramatically. The US Treasury 10-year yield has fallen back sharply today, now at 1.70%, and a 13 basis point fall since this time yesterday. And gold is up $18 to $1,480 an ounce. US oil prices at little change today at just on $56 a barrel. The Brent benchmark is just on $61 a barrel. And the Kiwi dollar is marginally higher, now at 65.2 US cents. On the cross rates, we're now staying up at 95.3 Aussie cents, and against the euro, we're unchanged at 58.8 euro cents. That leaves the trade-weighted index up at over 70.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.